Okay, first of all, anybody that's taken economic geology realizes there's no such thing as unobtainium. Half the gold ever produced has been produced since 1965 because they can heat leach no-seam gold. We're never going to run out of gold. We're never going to run out of silver. The only issue is going to be price. Now, my opinion, I want great big quotation marks on that. My opinion is that gold and silver and resource stocks will go up in June and maybe into July. The real crash is ahead of us. And when the real crash hits, it's going to take everything down. Now, you have to define what the role of gold and silver is before you can determine whether you should buy it today. What is the role of gold as it affects you personally in your finance? What do you want gold to do? The first and foremost role for gold, silver, platinum, palladium, oil, wheat, anything is to be a store of value. They are an insurance policy. They are something real. If you're given the choice between 1,000 Bitcoins or an ounce of gold, there's going to come a time you're going to say, 1,000 Bitcoins. I mean, that used to be like $60,000. But now it's zero. Okay. Gold is first and foremost an insurance policy. Now, if you got insurance on your house, you got insurance on your car, do you want to collect?
Not at all.
Okay. So if you buy gold and it's an insurance policy, do you want to collect on the insurance?
No.
No, absolutely not. If it's an insurance policy, you could hide it underneath the bed, okay, and hope the mice don't get it. But it's an insurance policy first and foremost. Now, when you get into the issue of investing, that's a totally different issue. I think that any time is a good time to buy an insurance policy. Sometimes they're better than other times to be investing to make money. In my opinion, October, November will mark the low for virtually everything. And I'm climbing way out on a limb here. And actually, it doesn't make any difference whether I'm correct or not, because I make my investment decisions. Everybody else makes their investment decisions. So you have to do what makes sense for you. But in my opinion, I think October, November would be a great time to buy resource stocks, gold, silver as an investment to make a profit. It's only just started. The financial markets are so out of balance. It's going to get worse than anybody's dream. And I'll throw this in because every time I do an interview and we talk about cryptocurrencies, everybody comments on how old I am, how stupid I am, how I don't understand cryptocurrencies. Bitcoin is down 31% for the week. Okay. There's been more money disappear in the cryptocurrency markets than disappeared in 2008. When a financial market gets out of balance, you have to restore it to balance. And all of this was very predictable. I would love to claim guruhood, but first of all, I don't believe in gurus. And frankly, I think that anybody who would look at the numbers with the incredible margin debt and the bond market had a 40-year bull market and the U.S. dollar hitting new highs, a monkey could have predicted this. You're using the term backed into a corner, which implies they had some choice. The Fed painted themselves into a corner. Now, I was in the market in 1970s into 1980 and remember 18, 20% inflation. The Fed was trying to take action then, but if we have 8.6% inflation now, if Biden is doing everything in his power to drive the price of energy and food higher, inflation is going to go higher. And I think my prediction of hyperinflation has a very real chance of being correct. The Fed did not back its way into a corner. The Fed painted its way into a corner. And if you've ever done that, if you've ever painted, I mean, everybody does it. I've done it. Start painting a room, and then you look down and go, I have no way out. And that's where the Fed is now. It doesn't make any difference what they do, okay? Do they destroy the stock market with increasing interest rates, or do they allow hyperinflation, or both? And frankly, I think both is the answer. The idea that Feds have some control, they're totally clueless. That's exactly the issue. There is a mathematical relationship between interest rates and inflation. And quite bluntly, whatever inflation is, in theory, interest rates should be higher. After all, you don't go to the bank and give your money to the bank in a savings account where you lose 10% every year. But that's exactly what's happening now. The Fed is faced with Hobson's choice. Hobson was an innkeeper in the 17th century in the UK. And when you went to him for a horse, he gave you the horse that was nearest the barn door. Now, it didn't make any difference if you wanted a plow horse or a race horse or a horse for a carriage. You got whatever horse was nearest the door. The Federal Reserve is so far behind the power curve. We're at the end of the empire. I mean, all this stuff that's related to Afghanistan, Ukraine, Syria, Iraq, the bond market, the stock market, the fake trials that we've got now, elections that don't work, judges that don't work, 10-day empire, okay? And one of the things that has to happen is they have to destroy the dollar. And interestingly enough, the dollar is hitting record highs because interest rates were so low, everybody borrowed dollars. So there's trillions of dollars in outstanding loans coming due, and people have to buy dollars to pay them off. So do you have any idea of how much the U.S. dollar went up today, Friday? It went up 1.1%. There is a $6 trillion a day currency market in the world. So when the most important currency changes 1.1% in one day, $63 billion just went to Bitcoin heaven. We're going to see things that you're going to come back 6 months from now and say, Bob, why didn't you tell us how bad it was really going to get? And I'm going to say, well, I was just afraid to.